Okay, let's unpack this. Today we are taking a really ambitious deep dive into the idea of the modern city.
Right, not just, roads and buildings.
No, not at all. We're looking at it like a complex ecosystem, specifically how cities handle the flow of people, the flow of money, and maybe most interestingly, how cultural identity gets built.
And to do that, we've had to synthesize sources from, well, all over the place.
Right.
We're looking at financial inclusion for immigrants in Latin America and the Caribbean,
And then jumping to housing policy in U.S. welcoming cities.
plus a really fascinating economic comparison between two Canadian cities and even the cultural rise of a pro-sports team in the American Midwest.
So our mission is pretty straightforward. We want to cut through the noise, find the specific policy gaps and those surprising connections that really shape opportunity in cities today. The goal is to get you up to speed, fast, on all these interconnected issues.
So where should we start? The big picture, I think. The sheer scale of human movement.
Let's do it. Let's focus on the LAC region first.
The numbers are, frankly, historic. I mean, just looking at the displacement from Venezuela alone, we're tracking 7.3 million people who have left. That's as of mid-2023.
And it's not slowing down.
Not at all. Irregular entries at the U.S. southern border, for example, were up 27% in 2022 compared to just the year before. It's a constant rising flow.
When you talk about movement on that scale, the focus is often humanitarian, which is of course critical, but there are massive economic implications here.
Huge. And they are, for the host countries, overwhelmingly positive. Migrants provide this demographic bonus of working-age people.
A demographic bonus.
Yeah. And to put a number on it, one source showed that between 2009 and 2017, Chile's GDP grew by over $63 billion. And a major reason cited for that was the influx of the immigrant workforce.
So that sounds like a strong argument for, well, more open immigration policies, but do the sources talk about any pressure on local wages or services? Is it a purely positive story?
That's a fair question. And it's complex, of course. A rapid influx can strain social services, definitely. But the data we're looking at focuses on the net positive. The sheer productive capacity, the consumer spending from the new population, it seems to outweigh those costs, especially in countries with aging populations.
Okay, so a net positive. And a huge part of that economic story is remittances, right? The money people send back home.
Remittances are absolutely central. In 2022, the flow to the LAC region hit $145 billion.
Wow.
But get this, for some countries, it's the bedrock of their economy. Remittances make up 26.8% of Honduras's GDP,
A quarter of the entire economy.
almost 24% for El Salvador. You can imagine, if you're living there, how vital that money is. It's an enormous pillar of stability.
And yet, even with that being so foundational, the sources point to this persistent, really deep-seated problem. They call it the inclusion gap.
It's so frustratingly simple. Migrants just consistently lag behind native-born residents when it comes to owning basic financial products.
How big is the gap?
It's an average disparity of 10 percentage points for credit products and about 9 percentage points for things like savings or retirement accounts. So they're fueling the economy, but are often locked out of the very system that would let them build wealth.
So let's dig into the why. What are the specific hurdles? The first one seems to be the most basic, just proving who you are, identification.
Yeah, the whole KYC or Know Your Customer compliance, this is foundational. Many people flee a crisis without documents, or their status is irregular, so banking is just impossible from day one.
But it's not just about that, is it?
No. And this is the crucial insight. Even migrants with regular status who've done everything right, they still face these barriers.
Why?
Because the banking systems are just rigid. Their software, their frameworks, they aren't built to recognize, say, a temporary residency permit that doesn't fit their standard template.
So it's a systems problem, not a people problem?
Exactly. Some places are adapting.
Yeah.
Mexico is working on a tiered KYC system where you can use something like a consular ID to open a basic account. That small bit of flexibility is huge.
And that inability to get into the system, that feeds directly into the second massive barrier you found, credit history.
Or the lack of it. When you move across a border, your financial history, it just evaporates. Poof.
All those years of paying rent on time, utility bills.
Gone.
Right.
In the LAC region, there's no real collaboration between the credit bureaus. So you arrive in a new country, and you are, financially speaking, a ghost. You have to start from absolute zero.
Which is just so wasteful. All that data just lost. Are other places doing this better?
Oh, absolutely. There are some incredible innovations. In Kenya, they have a system called Mshwari that uses your mobile phone activity, how often you top up your digital transactions, to create a credit score.
Wow.
And in Europe, they've set up digital data corridors.
Hmm.
So Ukrainian refugees who arrived in, say, Poland could access their verified credit history from back home. The tech exists.
Yeah.
The political will just needs to catch up.
That is powerful. Okay, the third and final financial barrier. The simple cost of sending money home, the cost of remittances.
It's still just way too high. The average cost to send money from the U.S. to Mexico was about 4.7% in late 2023.
Which sounds small, but if a family relies on $500 a month, that's nearly $25 lost to fees every single month.
Right. It's a hidden tax on poverty. But this is where technology offers a really clear path forward. Fintech, and specifically cryptocurrencies, are starting to change things.
Okay, so talk about that.
Well, the Bahamas launched a digital wallet called Cinco, and it uses something called the USDC stablecoin.
Wait, for anyone who doesn't follow crypto, break that down. What's a stablecoin and why does it make things cheaper?
Sure. So a stablecoin like USDC is a crypto token that's pegged to a stable asset, usually the US dollar. So its value doesn't swing wildly up and down.
Okay, so it's stable. Why is it cheaper?
Because it bypasses the old banking network. You know, all the correspondent banks that each take a little cut when money moves internationally. This new tech just skips them. The potential savings are huge, maybe 50% or even up to 80% cheaper than a wire transfer. It's a total game changer.
A reduction of 80% that's life-changing. Okay, let's pivot from that global financial flow to something more local. Long-term stability in housing, right here in the U.S.
Because stable housing, that's the bedrock of integration and wealth creation.
And our sources really highlighted the role of community land trusts, or CLTs. For anyone unfamiliar, these are nonprofits that hold land for the community and then sell affordable homes on top of that land.
It's a model designed to fight displacement, and it goes all the way back to a collective of black farmers in Georgia in 1969. And it's proven to be incredibly resilient. Homes in CLTs had much lower foreclosure rates during the Great Recession.
But here's the policy disconnect, and this is where it gets really interesting. A lot of U.S. cities have these welcoming cities initiatives, right, designed to help immigrants.
Right, to integrate them into the community.
But the research found that these welcoming city programs almost never coordinate with the local housing planners or the CLT staff.
So why the disconnect? Just bureaucracy.
It seems to be a mismatch in focus. The welcoming initiatives are all about immediate needs. The first few weeks, resettlement services, they see immigrants as new arrivals.
While the CLTs are thinking long-term.
Exactly. They're thinking about home ownership, building family wealth over generations. The two programs just aren't talking because their timelines don't line up. It's a huge missed opportunity.
So the CLTs that are successful have to innovate around these government silos.
They do, and some of them are doing amazing work. Take LA Housing in Boise, Idaho. They translate all their complex legal and financial documents, not just into Spanish, but into Swahili, Arabic, and Kinyarwanda.
That's a deep commitment to outreach.
It's huge. Or look at the City of Lakes CLT in Minneapolis. They know that many immigrant families live in multi-generational households, so they focus on developing accessory dwelling units, ADUs.
The in-law suite model.
Right, which either allows a family to expand or gives the homeowner a vital source of rental income to help them stay financially stable.
And they tackle the financing, too,
Yeah.
which is often the biggest hurdle.
They absolutely do. The CLCLT there works with local lenders to offer things like the I-10 mortgage, which is for households that might be undocumented and don't have a social security number. And crucially, they accept cash purchases.
Cash purchases? For a house? That seems unusual.
It is for a traditional bank.
Yeah.
But it recognizes the reality that for many East African and Islamic immigrants, housing funds often come from community lending pools. It's a lump sum of cash, not a 30-year mortgage. The CLT is flexible enough to adapt to that cultural reality.
That's a perfect example of how real inclusion needs both financial flexibility and cultural awareness. Okay, so let's zoom out again and connect this to the bigger economic picture of cities. When you look at the top-ranked U.S. cities for immigrants, New York, L.A., Houston, you see this universal trade-off.
The classic cost versus opportunity dilemma.
Yep. Cities like Seattle or San Jose have these incredible high salaries, but they're balanced by an extremely high cost of living. Housing, mainly.
And then you have places like Houston or Phoenix, which are more affordable, lower barrier to entry.
Right. But we found this amazing comparative nugget from Canada, looking at Calgary and Halifax.
Okay, this was fascinating.
Get this. In October 2022, the average home price in both cities was almost identical. We're talking $499,000 in Calgary versus $498,000 in Halifax.
No way. So the price tag for a house is basically a wash.
Completely. So the whole decision comes down to your paycheck, and that's where the story is.
What's the difference?
Calgary's median household income is over $97,000. That's 18% higher than the national average.
And Halifax.
Halifax is at about $80,000, which is actually 2% below the national average. So for the same house, you have a vastly different quality of life because of that income gap.
So it all comes down to that cold, hard calculation. But, economics isn't the only thing that defines a city. What about momentum? Civic identity. For that, we have to look at Columbus, Ohio.
Right. Columbus is, first and foremost, an Ohio State football town. That is the identity.
It is sacrosanct. Ohio State is number one, no question. But the evidence we saw suggests the city's Major League Soccer team, the Columbus Crew, is making a real run at the NHL's Blue Jackets for that number 2 spot.
So what's driving this? A sports team's popularity can ebb and flow, but this feels different, like a real shift in identity.
It was a perfect storm of factors, really. It started with a grassroots movement called Save the Crew, which successfully fought to keep the team from relocating. That created this incredible sense of local pride. It was a victory won by the city itself.
So the identity was fought for, not just inherited.
Exactly. Then they won the MLS Cup in 2020, got new ownership, and this is key, a brand new stadium right downtown. The whole game day experience is on another level now.
And the numbers back it up.
Absolutely. They're selling out. Games 9 of the 11 mentioned in the source were sellouts, and their average attendance is now higher than the Blue Jackets. They are gaining serious cultural ground.
And you can't ignore the fact that MLS as a league is just, it's on a rocket ship right now.
That's the external context, right?
Right.
The Apple TV deal, Lionel Messi joining the league, it's all lifting the tide globally. So you combine that global momentum with this hard-won local pride, and you get a recipe for permanent cultural change.
So this deep dive really shows that urban opportunity is never just one thing. It's a complex calculation. It's financial infrastructure, like how cheaply you can send money home with stablecoins.
It's policy alignment, making sure your welcoming city offices are actually talking to your housing trusts.
And it's that simple economic reality, right? The income versus cost calculation we saw with Calgary and Halifax.
In one city, success is cutting remittance costs by 80%. In another, it's building an ADU for a multi-generational family. And in Columbus, it's selling out a soccer stadium and building a whole new source of civic pride.
And that convergence of ideas leads us to a final, really provocative thought. We saw data earlier that immigrants in the LAC region often have a higher level of education than their host populations, sometimes a full 10 percentage points higher.
But those skills don't always translate into jobs that actually use them because of all those barriers we talked about.
Exactly. So given the incredible cultural momentum of a league like MLS and a team like the Columbus Crew that's building a diverse, passionate fan base, what new role could a city like Columbus play? Not just in welcoming immigrant fans to a game, but in truly capitalizing on all that diverse, highly skilled human capital that's currently being excluded from the economy.